Being able to identify order blocks is key to making money in the markets. Institutional traders and market makers are placing their orders inside of these key liquidity zones. So understanding order blocks is important no matter the strategy that you trade. So in today's video, I'm going to share with you everything that you need to know about order blocks. I'm going to explain what are order blocks, how to identify them, how to draw them, and my 1-minute order blocks trading strategy that I use every single day. So without further ado, let's get right into the video. So what are order blocks? An order block is an area where large market participants have placed significant buy and sell orders. So being able to identify these order blocks is going to be very important when it comes to trading. And if we can consistently identify these order blocks and determine the difference between high probability versus low probability order blocks, we are going to be able to trade with the smart money. Order blocks are also key levels/areas where there's lots of liquidity. So the reason why these large market participants are placing their orders inside of order blocks is because there's a lot of liquidity resting around these key areas. So if there's a lot of liquidity resting around these key areas, there's going to be institution and market makers that place their orders in these areas of significance. So order blocks is very important. As you can see right here, what we want to do is trade with the institutions and market makers. So being able to identify these key levels is going to be very important. And that's what I'm going to be doing in today's video. So the first thing that we're going to talk about is how to identify them. So the first thing that we want to look for is a clear trend in the markets. A clear trend is very important in identifying these order blocks because we don't want to be trading order blocks when the market is in a range. What we want to wait for is a clear trend. Number 2 is a break of structure. Once we have step 1 and step 2 checked off, then we can go on to step 3, which is mark out our order block. So right here, you can see that we have an uptrend. We're making higher lows, higher highs, higher lows, higher highs. So what we have here is an uptrend in the overall markets. Second, what we want to mark out is a break of structure. So you can see right here, once we break towards the upside, what we have is our break of structure. And then step 3 is we can mark out our order blocks. So in this case, we're in a clear uptrend towards the upside. Now we can mark out our down close candles. I'm going to show you how to draw order blocks here in a second. But as you can see, price is pushing towards the upside. We're now coming back down to retest our key area, which also coincides with our order block as well. You can see price is now continuing back towards the upside. You can see once again, price breaks structure once again towards the upside. And now you can see these are down close candles that we can have marked out. And you can see price pushes, breaks above, retest, and we have that continued push back towards the upside. So now I'm going to do a little bit more of a deeper dive into how to draw order blocks, the different ways you can draw order blocks, and which ones are high probability versus low probability order blocks. So right here, I'm going to be drawing out bullish order blocks. So when we're in a clear trend towards the upside, what we're going to be looking for is down close candles. So technically speaking, when we're in a clear trend, right, every single down close candle can be used as a potential bullish order block. In this case, we're going to go from the left to the right, which is our highest probability. So if we're in a clear uptrend, what we're going to do is mark out the order block from the top of the wick to the body, right? This is the most highest probability order block. If price uses this area as a retest and continues towards the upside, you know that this is the most bullish case scenario when we have an upper wick all the way to the top of the body. The second most bullish case scenario, right, is when we don't have too much of an upper wick. When we don't have too much of an upper wick, what we're going to mark out is the top wick all the way to the bottom of the body. And in this case, price can dig down into our order block. It can tap the top of the order block. It can come a little bit deeper into the body of the order block and still be bullish for a continued push towards the upside. And then on the right hand side is our lowest probability order block, which is when we don't have any wicks whatsoever. When we don't have any wicks whatsoever, what we can draw out is our full candle from our top of the body to the bottom of the body. When there is no wicks, we can draw out the full candle, and this is what's called our lowest probability order block. And in this case, right, since we don't have any wicks, we don't have any key levels, so price can bounce off the middle of the order block, price can bounce off the bottom of the order block, right? We don't have any levels and wicks to go off of, and in this case, this is classified as our lowest probability order block. So as you can see, once again, we're going from our highest probability to our lowest probability. Now let's go on to bearish order blocks. As you can see right here, I'm on the bearish side. In the bearish case, right, what we're going to be doing is looking for a clear trend towards the downside, and now we're going to draw up close candles. In a downtrend, what we're going to be looking for is any up close candles in price, but there's differences between high probability and low probability once again. So on the bearish side, what we're going to mark out is the bottom of the wick to the bottom of the body. When price gets back underneath, right, this is the highest probability for a continuation towards the downside when price rejects off the wick and rejects off the bottom of the body as well. This is the highest probability order block for continuations towards the downside. Second, what we have is when there's not too much of a lower wick right here, we can mark out the bottom of the wick to the top of the body, right? This is where price can bounce off the bottom of the body, where price can dig a little bit deeper, tap into the top of the body and still continue towards the downside. And then on the right hand side, I have my lowest probability order block is when we don't have any wicks whatsoever. We can draw it from the bottom of the body all the way to the top of the body, and this is what's called your lowest probability order block. As I mentioned, same thing from the bullish side as well. There's no wicks, so price can dig deep into any portion of this order block and still be bearish for a continued push towards the downside. So with that being said, let's go on to some examples and see what this looks like on an actual chart. So as you can see right here, I have a few examples of some bullish order blocks towards the upside. Step number one is identifying the trend. As you can see right here, we're clearly in an uptrend, creating higher highs, higher lows, higher highs. So what we're going to be doing is now going on to step two, which is marking our break of structure. So as you can see right here, what we have is our break of structure pushing towards the upside. And now what we can do is mark out our order blocks. In this case, it's going to be our down close candles. So right here, you can see our top of your wick to the body, which is your highest probability order block. See price breaks above, retest, and now we continue towards the upside. And I can see we have another down close candle here. In this case, similar thing. We can mark out the top of the wick to the body and drag this over. And I can see price continues higher, retest, and we have a continued push towards the upside. Now I can see we have another down close candle. In this case, right, we have a pretty small upper wick right here. Since we have a small upper wick, we can mark out from the top wick all the way to the bottom of the body. And now you can see how nice price is reacting off this key area, comes back in, taps it, and then we still have that continued push towards the upside. So right here, based off this example, you kind of get a gist of what I'm talking about. In a clear uptrend, what we're going to be doing is marking out down close candles. So right here on the right hand side, you can see we have a nice push towards the upside on the overall market. And what we're going to be doing is looking for down close candles. You can see this is our first down close candle, and we can mark this out. What I want to see price is it respect the top of the wick to the body, but you can see in this case, it dug a little bit deeper to the bottom of this down close candle. It dug a little bit deeper into the bottom of this down close candle, but you can see right here, price never closed below this bullish order block, and we ended up pushing towards the upside. So you can see if price respects the top wick to the top of the body, that's going to be your highest probability, but that doesn't mean price can't dig to the bottom of the wick. In this case, you can see it dug to the bottom of the wick and price still respected it and continued to push towards the upside. So you can see once we had our break of structure towards the upside, and now what we can do is mark out our next order block. In this case, you can see right here, we have a small upper wick. So what we can do is mark out the top wick all the way to the body. You can see once price broke above, we had that nice retest, and you can see price respecting this order block, which also coincides with our retest level. And then we ended up having that continued push towards the upside. So now let's go on to some bearish examples that I have. So right here, you can see that I have some bearish examples. In this case, on the left-hand side, we're in a clear downtrend. You can see we're making lower highs, lower lows, lower highs, lower lows, and we're continuing to push towards the downside. So what we're going to be doing is marking out up close candles. So you can see price, we have that break of structure towards the downside. Now what we can do is marking out up close candles. In this case, we have some nice lower wicks right here. So we can draw the wick all the way to the bottom of the body and drag this over. You can see price pushes towards the downside. Nice retest right here. We have another retest once again. Price is staying heavy, and now we're continuing towards the downside. We end up having another breaker structure, as you can see right here. Now what we can draw it is your next order block, which is this up close candle, and you can draw it out all the way to the wick, drag it over. You can see price breaks underneath once again, digs into this order block, which is this wick right here, respects it, and then we ended up continuing lower and so forth. And now you can see on the right hand side, we have another example, similar thing. We are continuing towards the downside. You can see we're putting in these lower highs and we're continuing the trend towards the lows. What we're going to be doing is marking out our break of structure level, which is right here. And you can see price pushes towards the downside. Now what we're going to mark out are up close candles. In this case, we can draw it from the wick to the body, and you can see price breaks underneath, retest, continuation towards the downside. And you can see how this works is that every single time we break structure towards the lows, right, we can use these levels as potential entry points. I'm going to talk about this a little bit more in a second here. So with that being said, now let's go on to my 1 minute order blocks trading strategy that I use every single day in the markets. So this is the exact entry model that I use on a daily basis. You can use this on the 1 minute, the 5 minute, the 15 minute, on any single time frame. I personally love using this on the 1 minute time frame. On the left hand side, what we have is our bullish case scenario. So as I mentioned, what we're going to be looking for is a clear trend in the markets. You can see we're clearly in an uptrend here. What we're going to be doing is waiting for our break of structure. And you can see price is pushing towards the upside. So once price pushes towards the upside, as you can see here, what we create is our retest plus our down close candles, which is going to be used as an order block. And you can see price breaks towards the upside, comes back, retest this level, and then we have that continued push towards the upside. So this is what I look for on a bullish case scenario, right? Once price breaks structure towards the upside, I'm going to be looking for the retest in combination with your order block for that continued push towards the upside. So simply, it's a break and retest in combination with an order block as well. So we can use this for multiple confluences, right? A break and retest works best when we have displacement, when we have order blocks. This is when we want to look for a retest when there is multiple confluences. So towards the downside on the right hand side is similar. So you can see right here what we have is a clear trend towards the lows. We're making lower highs, lower lows, right? And we're continuing to push towards the downside. As you can see right here, what we're going to mark out is similar thing, our break of structure. So once we break structure and we continue to push towards the downside, then we can mark out our retest level and our order block. So in this case, we can draw this out, which is going to be our up close candle. You can see price comes back, retest this area. That's where we can look to go short for that continued push towards the downside. And with the drawing tool, what this looks like towards the downside is similar thing. We're going to be looking for the retest stop just a break above, and we're going to be looking for a 1 to 2 or key levels and below. So now with that being said, let's go on to some examples that I have for us today. Quick interruption to the video, guys. 2025 is officially here. The markets have plenty of volatility and liquidity in the markets, and that only means one thing: opportunity. The markets have been giving us plenty of opportunity to make money on a consistent basis, but making money consistently in any market is difficult. That's why I have a community where I live trade every single day to help you navigate these markets. I share my screen, executions, thought process, how I manage my trades, and everything that you need to know on how to become consistently profitable. So if you want to come live trade with me every single day in 2025 and be part of our community, it's the first link in the description below. And now let's get right back into the video. So you can see right here, we're on my first example on NVIDIA, and you can clearly see that we're in an uptrend towards the upside. We're creating higher highs, higher lows, higher highs, higher lows, and we're having a nice push towards the upside. So far coming into this morning, what we do have is a gap coming up into market open. What we're going to mark out is a few key levels. We're just going to mark out your pre-market high. And now what we're just going to be looking for is any sort of order block, right, opening range retest for a continued push towards the upside because we are bullish on the higher time frames. So now we can go on to the 5-minute, play out the tape. You can see so far we are getting above our pre-market highs, also our key levels as well. So now what we're going to be doing is going on to the 1-minute time frame. So now you can see we're on the 1-minute time frame here, and what we're going to really mark out is a few key levels. So you can see what we have marked out is our 147.90. What we also have marked out is our pre-market high, which also coincides with our 1-minute opening range, and we have a few down close candles as well. So we can actually mark out this area, which is our 1-minute opening range, and use this area as a potential retest, which is also our 1-minute order block for that continued push towards the upside. Now we can play out the tape. Now you can see price is now tapping into our key 1-minute opening range, also our pre-market high, also our 1-minute order block as well. So right there, you can see that's where we have our confirmation candle. That's where we can go look long with a stop just to break below. And now what we can look for is a 1 to 2 towards the upside. And you can see right there, we end up having a super nice push off our 1-minute order block in combination with our 1-minute opening range with our pre-market high as well, based off the higher time frame. So this ended up being a super solid trade that I ended up taking for a very nice win on the day. Now let's go on to my next example. So as you can see, we're on my next example here, and this is on Tesla. And what we're going to be doing is looking for down close candles for continuation towards the upside because the higher time frame is bullish. So now I can go on to the lower time frames and mark out some key levels, which is your pre-market high. Now we can play out the tape. So right here, you can see I have the first 30 minutes played out here on the market. And what I have marked out is your previous day highs. So you can see we end up having a super nice reaction off your previous day highs. And now what we can also mark out is now your high of day. So these are the key levels that I have marked out on Tesla. What I like to see now is really the break of structure above this key pivot high and a retest of this key level for that continued push back towards the upside because the higher time frames is bullish. So now we can keep playing out the tape. So you can see right here, we finally get that break of structure towards the upside. So now what we can do is mark out this order block from this top of the wick to the body on the 5-minute time frame. And now we can go on to the 1-minute chart. So now I'm on the 1-minute chart, and what I want to see is the reaction off this 5-minute order block in combination with your 1-minute order block, as you can see right here. And this is also your retest level as well. So I want to see the reaction off this level, and let's see if we can get that continued pushback towards the upside. So you can see right there, that's our confirmation candle. Price came back down right into our 1-minute order block in combination with their 5-minute order block as well. You can see price ended up reclaiming this key area, which is super nice, and we had a strong confirmation candle. So this is where we can go look long with a stop just to break below. And now we can look to target a 1 to 2 towards the upside. Now we can play out the tape. And you can see right there, price ended up having a super solid push towards the upside for another win on the day. I just want to preface this by saying as well, all the trades that I'm showing you guys, I ended up taking in real time. So no, this is not in hindsight. Now let's go on to the next example. So right here, you can see we're on my next example, and this is on Tesla once again. This was actually a few days later, and we're in a clear trend towards the upside, as you can see right here. And the key levels that I have marked out is this 15-minute order block. So you can see this candle from the top of the body to the bottom of the body. This is a very key level. I drew this all the way over. You can see price ended up having a very solid reaction the day previous off this 15-minute order block for that continued pushback towards the upside. So coming into today with the range that we've had, what I really want to see is this continued push off this 15-minute order block for this move back towards the upside. So now we can go into lower time frames and play out the tape. So you can see on the 5-minute time frame, we're tapping into this 15-minute order block on the 15-minute time frame. Now what we can be looking for is our lower time frame order block. So the key level that we like to see break structure above is our opening range high, right? Our opening range high is going to be key, which is also our 5-minute opening range. What I like to see is the break of structure towards the upside, then the retest of this key area for this continued push back towards the upside. So we already retested our 15-minute order block and holding, so we know we're bullish. Now we need to wait for a confirmation on the lower time frames for this continued push back towards the upside. So what we can do is mark out this high and drag this over. Now we can go into lower time frames. So you can see that price is now breaking above our opening candle range high, which is also our 5-minute opening range. Now what I like to see is the retest of this key area. So if we go on to the lower time frames, which we're currently at on the 1-minute time frame, so now we're trading inside of this 5-minute order block, and we can also refine our key area to this 1-minute order block as well. So we have a 5-minute order block in combination with a 1-minute order block. What we really want to see is this continued push back towards the upside. So as we play the tape, price has a super nice confirmation candle. So we break it back above this 1-minute candle. And now we're holding our 1-minute order block. We're holding our 5-minute order block as well. This is where I get in long with a stop just to break below our 1-minute order block. And now what I'm looking for is a 1 to 2, which is my first target. And then my second target is my higher time frame key levels, which is your previous day highs. So if I go back onto the 1-minute time frame, I can drag this over, and this is my trade. And now we can play out the tape. Price ended up hitting my first profit target, and then finally hit my final profit target, which was your all-time highs on Tesla. And what's so great to note about this trade and how I was able to actually hold this trade was because of the order blocks. So if we go onto the 5-minute chart, you can see how well price is respecting these key down close candles. So if I mark out every single down close candle, in this case, right, once price breaks towards the upside, what do I mark out? I mark out my order block, which is from the top wick to the body. You can see price is respecting this area very nicely. And then once price breaks above, we have another breaker structure. I can mark out the next down close candle, which is this candle right here, and I can drag it over. And I keep moving up my stop. And you can see every single time we're holding my down close candles, and that allowed me to trade price all the way towards the all-time highs, which ended up being a super solid trade. And this ended up being one of my bigger trades of the year. So this ended up being super solid. And now let's go on to my final example that I have for us today. So you can see we're on my final example, and what I have is the SPY chart pulled up, and you can see we're in a clear downtrend towards the downside. So really what I want to see is the break underneath these key pivot lows for that continued push towards the downside. What I can have marked out in this case is your previous day lows. I can drag this over, and now I can go into the lower time frames. So now you can see I'm on the lower time frames here. I'm on the 5-minute chart. What I want to see is really the reaction off your previous day lows for that continued push towards the downside, towards your pre-market lows and below. So I'm on the lower time frames here. Now we can play out the tape. So you can see that price is now coming back up in towards our key area, which is our previous day lows. As long as we maintain underneath this key level, which is our 585, I do expect price to continue towards the downside. So now we can keep playing out the tape. So far, you can see we're getting some nice upper wicks here right off our key level. What I can have marked out and what I'm waiting for now is the break underneath your 5-minute opening range. If you can break underneath your 5-minute opening range, this is my confirmation that price is going to continue towards the downside, towards your pre-market lows and below. So you can see right there, we end up having our break of structure underneath low of day. The key levels I have marked out in this case is going to be my 1-minute opening range, and then also this up close candle, which is an order block as well. So I can draw this out, and now what I can be looking for is the retest off of this low for this continued push towards your pre-market lows and below. Now let's wait for the retest. Right here, you can see we're digging back up into this 1-minute order block. We end up getting a super nice reaction off of our 1-minute opening range in combination with our order block as well. Now you can see we're already at lows. And you can see right there, price end up having that final push towards the downside for another solid win on the day. So as you can see, order blocks can be used every single day in the markets. I love using these order blocks in combination with my other setups as well, which makes it for a high probability order blocks. Hopefully you guys enjoyed that video. Go back on the charts and back test it yourself and see how order blocks respect these key levels very nicely. And with that being said, if you guys enjoyed the video, make sure to leave a like and sub, and I'll see you guys next week for a brand new video. Peace.